Welcome back, everyone. This is another episode of the Anatomy of the Trade. Together with Franz today, we're discussing one of his trades in YELP. Franz, please walk us through the initial analysis of this short trade, by the way, not a long trade.
Okay. It was a short sale that I took a stab at back in early 2019. So it's a little bit, it's growing some whiskers, but it's still, given the current status of the market, some of the discussion that was presented in even as recently as yesterday in Wyckoff market discussion, it's probably a good time to talk about short selling. So this occurred. The top line on this weekly chart is the overall market. So it's the Dow Jones U.S. Total Market Index, and if you kind of play it back to at the end of 2018, we had that sharp correction. And coming out of it, there was still, a tendency to think, well, we've got a rally going here, but maybe we should still, at least I was thinking, maybe I should still take a look at some short selling ideas. And my screener that I use has a number of different screens. So coming out of that was YELP on a couple of different screens, and I thought, well, I'll take a look at it. So the first thing I did was lay out this weekly chart, and it looked from a weekly basis just structurally, and at the time that was more of the way I was thinking. I hadn't really gotten as far along in my education in the Wyckoff method, as Roman teaches it, to do a lot of necessarily tape reading. So I was looking at the structure, but the structure looked, it looked like a distribution. And based on that, I thought, well, I'll take a stab at this. So that's kind of the setup.
Okay. Well, a couple of things that we want to say right away. How we shorting? Well, first of all, shorting is very environmental, meaning that we have to be in the correct environment to short. Our preference would be obviously some kind of cyclical or major market reaction. So when we have a situation when the market is going up and we are thinking about shorting, we still have to have those candidates, that's for sure. I mean, like, I work with institutional money managers, and it's almost a requirement for them to have that list when the market goes up, because they always want to hedge and they always want to decrease their risk. And by initiating shorts against their longs, they are doing exactly that. But there is a danger here that those shorts could be initiated at the incorrect time relative to the market environment. So we're either in a cyclical or major market reaction, that's what we're looking for, or we are in a uptrend that exhibits some kind of reversal characteristic into a potential reaction. So that's the environment that we want to be in. Either one, either a cyclical or major reaction, or if we are in the uptrend currently, then we are looking for some signs of the reversals and deterioration in that environment. Secondly, we would be looking for a relative strength underperformance. And I thought that, Francis' selection here at the time, of where the trade was initiated was absolutely correct. If we look at the relative strength line, the stock relative to the market, we definitely see a lot of deterioration that did not start, last month or even last week. It just lasted for quite some time. So there is a depressed presence of institutions in this particular stock. They've been, selling the stock for some time, especially here into the strength. We could see this from this bar. Then another attempt to go up, another selling, and then some selling on the way down, and then capitulation. So they really, really got rid of the stock right here. And we'll go through this area here in a second. The third requirement is going to be structural requirement. So we want to be in the distributional structure, and we want to be in Wyckoff terms either in phase C or in phase D or early phase E. And if we look at all of these requirements, everything was perfect. Definitely distributional structure, definitely relative underperformance. The only requirement that was not fulfilled completely on the analytical side was just the environmental requirement. We would want to be, because we are in the uptrend right here, we want to observe some kind of either reversal or weakness and just short at the first signs of the market deterioration and the reversal. So this is a setup, and we right away see that first mistake right there. And I think it's very significant for us to think about and analyze, and then apply this even in the current market environment where we have the same type of thing, where we have a rally that is going up like it did off the low in 2018, and this rally could be a little bit more vulnerable than in 2018. And therefore, whatever shorts you have to think about where is the market showing some kind of weakness. All right, well.
Before we move, just for the benefit of our listeners, if we could go back to that chart for a second, because it's really not marked on there, but where did the short sale actually occur? It occurred in May, right in there, yes. So as a point of reference.
So looking at the market, and we're going to look at this a little bit more, but here and here and here and here, this would be the spots for us to think about, shorting. Obviously, something like this is very attractive, something like this, but you have to think about the context of the market, obviously. All right, well, let's look a little bit at this concept with more precision here. So this is the environment that we want to participate in a short trade. And then once we are in the uptrend, I thought that, if we're thinking that there is some kind of deterioration, some reversal, which we see here, we definitely see short-term reversal patterns like this one right here, this one right here. But we have also to think about what has happened before. There is a lot of momentum behind this rally. And usually momentum is going to pause, and then is going to have another attempt to go up, which we see here. And on this attempt, when we see a deterioration, this is where we are expecting now a more meaningful reversal, just because the conditions deteriorated on the momentum as to how the price moves. So a reversal in this area would be more valuable, and we would be thinking about the structure here. Okay, so what's happening here? Could we open the same type of the position? And then the short trade would be more profitable and more logical from that point of view. All right, well, Franz.
And I immediately notice an upthrust when you draw that resistance line across there. So yeah.
Right, and we obviously still reside in, within this bar right here, which is extremely important. This level plays, as an axis line, by David Weiss's definition. So that's an important line right there. Well, let's look at the trade, and let's discuss the trade itself.
Okay, well, first of all, point of entry number one, I have to scratch my head and say, what am I doing there after, what is that, 9 or 10 straight down days, and just a slight bump off of that, and then another couple, and I'm putting a trade on there. Okay, not too swift. So I don't think I do that in 2020. I better not be doing that in 2020.
Okay.
So
What about the additional points of entry right there that comes after?
once again, no confirmation, no real confirmation, which you have to wait for before you get an add-on that your, you know, that your logic is correct, that your analysis is right. It's just like, okay, well, I'm going to pile some more on here because I'm going to prove myself right, and I'm going to pile some more on, and I'm going to pile even some more on because now the price tried to go up and reverse a little bit. That would be POE number 4, and then the price is going to move above all of my entries, so I better get out.
Right.
So that's the trade, and it was not very well analyzed. Well, it was very poorly analyzed actually, and
I think the selection was great. I think maybe like the tactics on the execution were a little bit questionable, both on the timing of the entry and on the way how you were adding to the position. And I think, Franz, you know, like we talk a lot about the commonality of the mistakes that we have, you know, that we exhibit as traders. We usually make the same type of mistakes over and over again. And we kind of become very clueless, unaware that we are, you know, making those mistakes, unless an analysis like this comes about and we start seeing the way how we behave in the market. And after the post-trade analysis, you know, if we are able to accept that we made a mistake and then just say, okay, well, what do I need to do to correct this mistake? You know, put this into the feedback loop, then that's going to be very beneficial. Again, I would highly suggest for those of you who are interested in this type of the analysis, post-trade analysis, to sign up for our May special that is coming up on May 7th. And it's called Trust the Process. And we're going to talk about exactly these things and exactly how to correct those things and how to put it in the process in such way that in the present time, in the now, as you're making this mistake, you would become aware of it and you would make a choice to change that behavior or to take the consequences and just run with this. Okay, so the reason why I'm talking about this, Francis, because I remember one of your trades where we had the same type of issue. So just adding on at the same price level while the price did not move. And I totally agree with you on, you know, the kind of like assumption that we're probably going to stop here at some point, right? This bar shows a little bit of the acceleration to the climactic action, which is local climactic action, suggesting that we will be in some trading range. So I think that, you know, this was a little bit premature as an entry. Probably this one would be a little bit better, and even this one would be a little bit better. But overall, you know, if we would look at the daily chart here, climactic action, stop in, and then we have a change of character, a reversal, and then probably this area right here would be, you know, very beneficial to enter the position and to start adding to the position somewhere here in this area. So in terms of the initial points of entry, in terms of the add-ons, this, despite of, you know, how the trade worked out, that's probably would be a better sequence. All right, well, let's go through the post-trade analysis here. Bias, what do we say for the bias?
well, I think the bias is 50-50. The reason being that the stock was the proper stock, but the market wasn't the proper setup.
Right, okay,
Timing, obviously, no.
okay,
Character, yeah. You know, relative strength declining over a significant period of
absolutely.
time.
Mm-hmm. Okay,
Point of entry, negative. The stop loss was okay.
Mm-hmm.
At least I didn't compound my entry mistake. Add-ons, no.
Mm-hmm.
Exit was okay.
Yes. So with that, we come to the variance of 50%. And what are the comments and lessons?
Well, comment number one is when you're short selling, you've got to be understanding what the overall market context is and be in sync.
Okay, so market context and in sync. Okay. What else?
Add-ons, there's got to be discipline. It's just, you can't wholesale willy-nilly,
Mm-hmm.
just keep pushing
So
the
yeah,
button.
add-ons, execute those at the point of the confirmation, right? So we always want to open a position, then the price confirm, our analysis by moving in the direction that we thought the price will do this, and then add at the next opportunistic point. Okay, what else?
The next is completely missing the upthrust that occurred after I'd gotten out, and not following through with what would have been, pretty profitable little short sale in a quick period of time.
Mhm. So it's a very, very common thing for us traders to do. After a loss, and you guys probably will agree with us, after a loss, in a lot of cases, we withdraw from looking at the stock, especially here. I mean, with this type of rally, it would kind of like put our conviction for the short selling, into a very low confidence type of level. So we still want to follow on those trades that failed, and in a lot of cases, analysis will be correct, and then the timing will not be correct. And we're just looking at this type of trade and execution here. So therefore, if you know this about yourself, you know that some of your positions that you've opened before and they didn't work out, but they worked out later on, come back to those stocks. Still have them on the watch list. Define a second point of entry, just based on your analysis, and this could be beneficial. Franz, what else?
Well, on the plus side, it was a good selection. I mean, it was, and it's, if we go back and look at the weekly chart, just sticking with it into the sell-off that we just had, it would have been hugely. I mean, it was still all along. It was a good selection. So
Okay, and what are the rules or a rule?
well, with a short sale, must trade with the market, with the overall market. Must be aware of, you can't enter a short sale in an uptrend. You talked about that several times during this discussion.
Mhm.
So
Okay, so market, synchronicity, okay.
yeah,
Anything else?
and add-ons. My rules for add-ons. Add-ons can't occur without confirmation that the
Hmm.
previous probe or
Hmm.
entry is working.
Yeah, I think these are great rules because they're so fundamental. Being in synchronicity with the market on your positions that you want to enter is extremely important because it's going to help you out to go with the trend, even if the market is in overall uptrend, but you're timing it into the correction of the market, which could be just a small correction. It just so much better on the execution level. And then the add-ons after the confirmation, just gonna keep your size at the manageable risk level. So this is also a very, very fundamental, foundational type of thought. All right, well, Franz, I think this is a great analysis of the trade, and I'm looking forward to see how this start materializing, into some of the short trades, maybe, in the near future as the market, produces some kind of correction. We could see some of your trades to the downside that actually were timed correctly. Selection was great, so I'm looking forward to seeing this. And as usual, guys, for those of you, and we've had already, some of the students submitting their trades. For those of you who would like to for us to discuss their trades, please send those, and we will be happy to analyze them after your trade and give you some kind of feedback as to how you can improve. Franz, really good episode. Thank you for bringing this trade to our attention.
Thank you, Ramon. And this post-trade analysis is invaluable.
Agreed. Thank you, and bye-bye.